Now, moving directly to the solution is useless. We have to first understand what's the problem. Therefore, our first point is how retailers mark supply and demand zones and why it don't work. So, retailers come on the chart. Let me remove it. Okay. So, retailers come on the chart. See what's the trend. So, the trend is bullish. So, they either mark the whole range for their demand zone or they just mark the pivot candle. So, for example, we mark a pivot candle. Now, we are waiting for a bullish candle to be formed. Not we, retailers. Okay. Now, we are waiting for a bullish candle to form. So, the bullish candle formed and now we will set our buy entry here, and then we will set our stop loss, and then we will set our target. And now the retailers are just waiting for their stop loss and their hard money to be gone. Therefore, let's see. Okay, price go up and then hit their stop loss and then moving up. But now many people will say, oh, you haven't given your stop loss or a little bit of buffer. So let's give it a little bit of buffer. Okay, so we gave it this much big buffer. Okay, and now see what happens. Okay, price going up, and then see, hit your stop loss. Let me take my pencil tool. Okay, price come here, hit your stop loss, and then how fastly it move in the direction. But why it happened? You planned the trade, you marked your supply and demand zone, you waited for entry confluencers, but still, why your stop loss hit? Stop loss are constantly hitting because you are trading against the big banks, against the institutions. Let me explain. So you are marking your supply or demand zone here, but 99% of retailers are also marking the supply and demand zones here. So if smart money wants liquidity to fuel their move and to go upside, where's the liquidity? The most amount of liquidity is sitting below it. Therefore, price come here, sweeps the liquidity, and then move up. Now, you are not wrong. The market isn't just manipulating you. It's because you don't know how to mark a institutional supply and demand zones. So this takes us to point number 2, how to mark institutional supply and demand zones.